Hello, everyone, and welcome back to another episode of Milkshakes, Markets, and Madness. This is a show where we talk about the financial markets, we talk about the madness surrounding those markets, and we do it all through the lens of the dollar milkshake theory, which is a framework that I came up with several years ago to help me think through how the markets may react as we move forward in time, and especially if we were to move into some kind of a sovereign debt crisis or currency crisis. And as the show's name implies, we don't just talk about markets, we talk about the crazy world around us. And boy, do we have a crazy world around us right now. So, last week, the first episode we did post-election, we had our good friend Michael Every on, who kind of really talked about his framework for how he kind of sees the world. And it gels really well with my framework for how I see the world. So I thought it was great to have him on to kind of set that up. And I would encourage anybody who's watching this episode that did not watch last week's episode to go back and watch it, and also download the report that's in the link that has the link in the show description, and read through that. And like I said at the time, print it out, put it on your desk, because I think that's going to be a piece that you can refer to several times as we move forward. With the Trump presidency. And listen, I think the Trump presidency is a very big deal. Now that may be kind of the biggest understatement, and I don't think that that's really surprising to everybody, but I'm not sure everybody has really thought through exactly what it all means. I think they're starting to, and I think that's why we had a little bit of volatility towards the end of the last week in the markets. And I'm going to talk a little bit about why I think it is a big deal as I talk through some of the market-related information. What I thought we would do this week, I had a couple requests to talk about, funnily enough, dollars and gold. And, why has the dollar been on such a tear, and why did gold, after having such a magnificent year, start to pull back a little bit? And here's the thing with gold. It hasn't really pulled back that much yet. Silver's pulled back a fair amount. The miners have really pulled back. But in any case, I'm going to talk about that a little bit. And I'm going to talk a little bit about some of the things I think that we could see kind of later this year and into the early parts of next year. But I thought we would do something a little bit different this time. And sometimes I just sit here and talk. Sometimes we have a guest on, and sometimes I go through kind of a slide deck. I'm going to try this time just to walk through some charts, but I'm going to walk through it on my Bloomberg kind of live, if that's the right way to say it. So, give me a little leeway here. I'm not sure how this is going to go, but I'm going to try to share my screen and see if we can just walk through some charts together, because I thought that might help this whole process. So hopefully that's doing it here. So this is a chart of the dollar index. And like I said, one of the questions that I had from a good friend of mine saying, could next time you do the show, could you just kind of walk through why the dollar has been on such a tear, and why specifically post Trump getting elected, it has rallied so much? Because I think with a lot of the assets that have kind of moved post Trump, they haven't totally been a surprise. But I think for some people, the dollar was a surprise because, I think one of the common perceptions for Trump is that he wants a weak dollar because he wants to manufacture and he wants to export. And also, I think at one point there was rumors during his last administration that Judy Shelton was going to be appointed to the Fed board, and she's a gold advocate. And long story short, I think there's always been this little bit of not only that, but let me take a step back. There were several times during his administration where he even said, "Listen, the dollar's too strong. I want interest rates lower." And there was a point. I'll even just pull it up here on the chart. Let's just go back. Let's go back to the Trump presidency and see. I think there was a time, here it is, 2017. So he got elected here In 2016, the dollar rose, and then he gets in the office, and here it's coming down. And I think this was about the time that he was saying, "Listen, rates are too high. There's no need to," because remember, at the time, the Fed had not raised rates for years. And then I think they finally raised right as he's coming into being president, or I think they did one raise at the end of 2015. And then I think they did another raise at the end of 2016, but these were really kind of like token rate hikes. And of course, then he gets in and he's like, well, that's not fair. My predecessor had this weak dollar, helped the economy. Now they're jacking up rates. And so, his talk kind of sent the dollar lower. And I think there was even a time when Mnuchin even said something about the dollar. I'm trying to remember. I remember he said something and the dollar fell like crazy. And then he had to come out a couple days later and say, "Hey, I was a little bit misinterpreted. Don't run with that too hard." But anyway, let's bring it back to where we're at today. Why has the dollar rallied so much post Trump election? Well, first, let's just look at it year to date, or really since its high a couple years ago. It had obviously a big run in 2022. And then it started to pull back. And then as we got into 2020, this is when they start talking about these going to have these 7 immaculate rate cuts. And then we got into 2023 here at the end of we were going to have all these rate cuts. And then we got into the beginning here, and these rate cuts didn't materialize as fast as they thought. So then the dollar rallied into the spring, kind of late spring. And then they became pretty clear that they were going to cut rates. It was just a matter of which meeting they were going to do it. And so you can see for much of June, July, and August, the dollar just fell. But the problem is that by the time there was so much talk of the rate cuts that the market was pricing it in, and by the time the rate cuts actually came, the dollar had already made the move. And so they cut rates here, I think right here. I think it was this week, right around in here. And I think the dollar basically stayed that low for another week. And then ever since, it's been just kind of rocketing higher, with the exception of 1 week at the end. I think it was the first week of, I think it was the week of the election, actually. It initially started down, or no, this was the week before. And then, Trump was elected, and it's just shot up since. But, the thing is, markets move on anticipation. And so the market had already moved on anticipation of rate cuts down, 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 down. And so it really kind of became a sell the news event, or in this case, a buy the news event, because the rate cuts were really already priced in. And then once it started rallying up here, and then once Trump was elected, it kind of, I think it's rallied. Let's just look here. It's rallied from the rate cut until now. It's up about 7%. Now, listen, a 7% move for a currency, that is a big move for a currency. I know in today's day and age of tech stocks and Nvidia and crypto, 7% it's like not even a move. But for a currency, especially the world reserve currency, that is a major move. And to do it in 2 months is even crazier. So this is a really big move by the dollar. But the part of the reason that it has moved so much post-Trump is because while he has often said, again, like in the last election, that, sometimes, having a weaker dollar can kind of help goose the economy or help with exports, a lot of his policies are not dollar negative. And he has even said recently, I love a big, strong dollar. And so the policies that I'm talking about is, number one, he said he wants to fight inflation. Well, you can't cut rates and fight inflation, right? So that's number one. But the bigger than that is, even if, let's say, he does want to cut rates, and let's say the Fed continues to cut rates, the bigger policy of Trump's is the tariffs. I mean, how many times has he said the most beautiful word in the world is tariffs? And so the reality is that even if he just does 10 or 20% of what he has said he's going to do with regard to tariffs, this has major ramifications for not just trade, but it has ramifications for the global economy. and it has ramifications for the export and the circulation of the US dollar. And what I mean by that is when if he puts tariffs on, that means that other countries, when they sell their goods into the United States, are going to have to pay a fee. That means there's less dollars that they are making by selling those goods. And if there's less dollar, if they are making less dollars and there's less dollars flowing back out into the global economy, then that means the supply of dollars falls. But as we all found out in 2022, you know, the supply of dollars, when they were raising rates in 2022, let's look what happened, right? The dollar went up, 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 up. And that was the year where all around the world, countries were bailing out their currency markets. They were bailing out their sovereign bond markets. They were bailing out their real estate markets because the dollar is used by the entire world. And so if there's less of it out there due to rate hikes or due to tariffs, then that has major implications. And so that is a big part of the reason why the dollar has been going higher, because there may not be as many dollars freely flowing around the world under a Trump presidency. The other part of the reason that the dollar is going higher is because Trump is viewed as a pro-business president. And he is, he's, how many times has he said, let's make America great again? And we're going to, we're going to bring back manufacturing to the United States, and we're going to bring back the rest of the world is going to want to be involved. We're going to deregulate certain industries. And so that's all business positive, right? And so people from around the world want to invest in the United States. And to invest in the United States, what do you need? You need dollars. So the dollar has been rising as part of that. Another part that I think people just automatically dismiss, and we talked about this a little bit on last week's episode, is that tariffs will obviously have an impact on the global economy, and they will have an impact on the US. And they may initially even have a negative impact on the US. But I think everybody is too quick to say they won't work at all, and this is just going to boomerang back and destroy the US economy. I'm not sure that that is fully thought through appropriately. And again, I would refer you back to last week's episode for some of those reasons why. But the reality is that there will be countries from around the world that will build factories in the United States in order to avoid that tariff. Again, because if they're importing their goods from outside the United States, they will be subject to a tariff. But if they're building them inside the United States, then there won't be a tariff. And so that will have an impact on where people or companies, corporations decide to build their goods. And the U.S. Will be a recipient of flows as a result of that. Now, will it have the impact that Trump says it will? Well, time still, we're going to have to wait and see. But that is one of the reasons why the dollar is going higher. And then the third thing is that, or I don't know how many things we've talked about now, but again, for if you're going to invest in the United States, forget whether you're going to build a factory here or not. If you are a foreigner who wants access to the biggest market in the world, which is the United States, and which, with Trump as president, he is, again, he's seen as a potential, boost to the economy. You are going to need dollars to invest in that economy. So that is a number of, and this hasn't even started to talk about the stimulus that China has had to do in order to save their markets. The fact that despite all the talk, Japan has not been able to raise rates, and so the yen has been falling again. We haven't even talked about Europe, which is basically just I've said this many times. They just have a lot of problems in Europe. So it's hard to say it's all been as a result of the positive things in the U.S. There's just a lot of negative things around the rest of the world as well. But anyway, another reason that the dollar has been going higher is because rates have been going higher. So this is a chart of, in black is the dollar index, and in pink is the 10-year yield on the U.S. 10-year. And so as rates go higher, that tends to pull a currency higher with it. This chart, I mean, all you got to do is just look at this chart. You can see how the dollar tracks interest rates. You can look back here from 2021 into 22 when they raised rates so much. That's when the dollar rocketed higher as rate expectations and rate cuts started to expect. Then the dollar fell, and then we get more, and then so the correlation is pretty obvious. Now it doesn't always hold. Sometimes there are. Let's see. Here's an example where if we go back to the beginning of the Trump presidency again here, yields were actually rising because the Fed was talking about raising rates, but because Trump was talking about him wanting a weak dollar, the dollar fell. So there are periods of time where it doesn't hold, but in general, just look. You can just look at this chart and you can see the positive relationship between rates and the dollar. And so as rate expectations have been rising as Trump came into the presidency, that has been pushing rates higher, and then that has been pulling the dollar higher along with it. One of the reasons rates have been going up is, number one, the belief that inflation is fully under control has come down a little bit. The belief that the Fed is going to continue to cut at a fast pace, those expectations have fallen a little bit. Again, with Trump's policies, the budget is probably not. I know he's announced this DOGE, the Department of Government Efficiency, which, funnily enough, has two people heading it. If that's not a contradiction of terms, I don't know what is. That just speaks to the madness in the world again. But the idea that the budget's going to come down dramatically, even under Trump, I think is sketchy at best. And I think the world kind of agrees with that. And as the government continues to spend, rates probably, all things equal, don't crash unless we have a crash of rates. The expectation is that maybe they need to go higher, and maybe even though people are still going to buy treasuries, and I don't think the treasury is in any trouble of not being able to sell bonds. The rest of the world and the U.S. People buying them may just want to get paid more to do so. And so that's part of the reason that yields are going higher. And as yields go higher, again, it pulls the currency higher with it. But now let's not get too crazy here, though, because the dollar has come a very long way in a short period of time. Nothing goes up. And how many times have you guys heard me say this? Nothing goes in a straight line. Markets don't move in a straight line. There are no straight lines in nature. There are no straight lines in the markets. There will be a pullback. Now, is it going to come next week or next month, next year? I don't know. There will be a pullback in the dollar, especially when you consider the move. And this is a big move in a currency in a very short period of time. Now, this chart, this top line here is the dollar index. The middle is the relative strength, and the bottom, this is the stochastics, which is just a measure of momentum, really. And if we go back, let's go back to 2022 and look at this. So you guys have seen me talk about these same types of charts with stocks and different equity indices and different commodities. Well, the same applies for a currency. You can see back in 2022, the relative strength of the dollar got up into the 80s, and it was surging higher. The stochastics were, like at 95 or 96. They can't really go much higher than that. It was looking at this chart which led me on. Literally within an hour of the high, we sent out a tweet saying, well, the dollar's probably due to pull back at this point. Now, granted, I thought it might pull back to the 105 area and stay there. I was not expecting it to pull all the way back to the 100, but the pullback was expected because, again, markets just don't go in a straight line. Well, let's look where we're at now. Let's go back to the September of 2023. The dollar had started to rally again in a little bit. The relative strength got really high. The stochastics were high, and again, once they get that high, they don't have to crash, but they're probably just not going to keep going up at the same speed. And so, then the dollar fell back down. And so this is kind of where we're back now again, right? Again, it's not extreme. The relative strength is only 73. Typically, I like to see something above 80 before I start thinking there's going to be a pullback. But the point is we're getting up there pretty high. The stochastics are around 93. So again, not extreme, but it's getting there. And so, again, whether it's next week or kind of later into the year, we will have a pullback. My gut tells me we will probably go higher in the short term, but we'll just have to wait and see. But now that leads us over to gold. gold, as we said, had a huge run all year. Let's just look. What was gold up year to date until just before the election? It was up 36%. that's that's a pretty good year for any asset, and especially for gold. But what we saw was, it started to pull back a little bit before the election, right into here. But then on the election, then it fell a lot. Now, one thing I'll say, I was not surprised at this at all. I think many of you know that I had some puts, and that we had actually bought them back in this level. We bought them, it was around 2670. It went down initially, then it rallied up into the election, and then it fell down. So we bought puts about $100 higher than where we're at right now. But the reason we were not just, so when we started buying puts, a lot of it had to do with the relative strength, the positioning, and I'll talk about that in a minute. But the reason I was confident post the Trump victory falling was all the reasons that we just talked about. As the dollar and gold don't have to fall, like they don't have to be inverse. I've talked about this a lot, that we will have periods of time where the dollar and gold will rise together. But the dollar rising is a headwind for gold. And when you had the positioning where it was, the momentum where it was, it was where the dollar is right now, right? It had its really high RSI, it had its really high, stochastics. Positioning had gotten stretched, and then with Trump coming in, with the yields going higher, again, higher yields don't necessarily mean gold has to fall, but they're a headwind. And as the gold, or as interest rate expectations were rising, as some of the cuts that the Fed was supposed to be doing starts to wane, as the dollar rises, and as positions just start to kind of normalize a little bit, you've seen gold fall. Now, one thing, the other part of the reason is, I remember when Trump got elected in 2016, gold fell. Well, let's just look. Let's go back and look. I think gold fell 18 days in a row or something like that in 2016. So here it was. Here was where he got elected. It spiked the night of the election. Let me just see if I can zoom in on this a little bit. I hope you guys can see this. So here it was, gold spiked the night of the election. This is a weekly chart. So then for the next, okay, so it spiked in the night of the election. And then when they started thinking about what Trump's policies actually were, then it started to fall. So it fell for 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, 7 weeks in a row. It fell. I'll never forget that. I'll never forget that time period. But anyway, let's go back to where we're at now. And so again, part of the reason gold fell was the stuff we already talked about, but also not everybody will go buy gold if they think inflation is not here or is not going away. And this is where you kind of have to think about the markets being a common knowledge game. If you're a gold advocate and you think you should absolutely own gold because of inflation, that's great. And I'm not disagreeing with you. But that's not necessarily what everybody else will do. If everybody else, some people might want to be in equities in order to outpace inflation. And with what the equity markets have done over the last couple of years, the equities have done a good job of protecting against inflation. And if they think that that gold is a little bit extended and that yields are going to go higher, and therefore that's a headwind for gold, but Trump's going to come in and deregulate some industries and he's going to be pro-business, maybe the market is thinking that equities are a better place to hide out than gold. So that may be another reason that gold was falling. Now, again, I'm not suggesting that everybody go out and sell their gold as a result of Trump becoming president. I'm just saying that helps explain why gold has done what has it done. The other thing, let's jump to this chart now. You guys have seen me show you this chart many times. This is the COT. This is the commitment of traders, which shows the commercials, which are the big banks and the bullion banks, which are taking the opposite side of the speculators. And so let me just zoom in here. So, as I said earlier in the year, as this was going higher and higher and higher, and the commercial short position was getting bigger and bigger and bigger, that will have ramifications. Typically, so the biggest commercial short position that they ever had was back in 2020, the biggest short position they ever had. Other than that, this where we were in, I think, September, was kind of at its second biggest short position in history. And my point was, that is going to have ramifications. It's because gold was so stretched from a relative strength perspective, because it was so stretched from a momentum perspective, because it was so stretched from a speculative commitment of traders position, and there was such a big short position that we expected there would be a reversal, and that is what we have seen. So the question is, and I'm going to get into this in a second, does this have to go all the way back up here? No, it doesn't. Maybe we're going to get a bounce in here in gold, because here's the thing: gold's relative strength has fallen a lot. Let me just go back here. Let me see if I can put the RSI on here. Hold on a second. Oh, that's not what I want to do. I want to do it here. So you can see the road that kind of changed the whole chart, didn't it? Oh, well, but that's all right. Changed the whole color scheme. But see, the relative strength now is all the way down to like into the 30s. Now, typically you get below the green line. That's when you want to start thinking about buying it. So it's come down a lot. It broke through, the 50-day moving average. It's come all the way down to the 100-day moving average. I don't know if it's going to go all the way to the 200-day moving average. That would be quite a fall. And like I said, the sentiment and the relative strength has already fallen a lot for it to continue going down. And maybe this is a place. Maybe the 100-day moving average is a place where it will get a little bit of a bounce. Anyway, let's move forward. So then, but silver. Let's talk about silver, because silver, obviously has had an amazing year as well. Silver, I think, is at actually a really interesting spot, and the reason is because a couple of reasons. If you just from a technical perspective, if you look here, the kind of the 28, 29 level, you start to get into some support from a technical perspective. Not only that, but this $30 level, I've talked about this many times too. This $30 level has kind of been a ceiling for a long time, right? And so we hit it once, we hit it twice, we kind of got up in this range, a couple times. We hit it 3 times, we went through, we came back below, went above, went back below, and then we kind of definitively kind of burst up here. And so it's very possible that now what was once resistance is now support. And so I find it very interesting that it hit that line and then bounced last week. And again, if we look at the positioning is still fairly extreme, but not as extreme as it was. And so that positioning is starting to get not as bearish. And so maybe we get a bounce here on silver. Maybe it bounces back up into here. I don't know, but I think we're kind of at a critical level for silver here. If it breaks through kind of the 29, then I would expect it to come back down at kind of the mid 20 area. But it's very possible. Like I said, things don't go in a straight line. It's very possible it bounces up into here and kind of works its way, and maybe we get a resolution, early part of next year. Anyway, moving on. The other thing that's been very interesting is the VIX and the dollar. Now, I think we all know that the VIX has basically just, for the most part, been dead so the VIX is in the pink line and the dollar is in the black line. Now, these have two different axes. So the reality is that the VIX is much more volatile than the dollar. Okay. I'm doing this to show the correlation. But ever since COVID, the VIX has just been hovering, below 20, and for the last couple of years, it's been hovering around 15, which is just crazy, right? We had the spike up here in August, and then it's come back down, and I think it got as low as like 14 last week or something. It might have even hit 1390 or something. But what I find interesting is that typically the dollar going higher and the VIX going higher are positively correlated. So, and you can just see this on this chart. I kind of, if I zoom out, you can kind of see it a little bit better. But typically, when you see a spike in the VIX, it typically happens that you get a spike in the dollar as well. Well, let's look at this. This has been pretty interesting. That post, the election, the dollar has rocketed higher, and the VIX collapsed because it was risk on. And so this shows a couple things. Number one, that the dollar going higher does not necessarily mean it's bad for risk assets, especially for U.S. risk assets. And this is one of the parts of the milkshake theory that has been kind of the most controversial, is that a lot of people say we can't have a strong dollar because then that's going to kill the economy. Well, yes, but not necessarily, right? There are some ways that it couldn't happen, but a surging dollar in general is not good for risk assets. It doesn't have to be bad, but it's generally not good. And so, as it surged higher, the fact that the VIX was collapsing at the same time was really, really interesting to me. And typically, that doesn't last forever, right? And so, what was, again, also, I keep using the word interesting, but Friday was really interesting because we finally saw the VIX go from 14 to 16, in the course of a few hours, and the dollar kind of peaked a little bit. I think it was even over 107 at one point last week. So it's going to be I think we got to watch the relationship between these two very carefully over the next couple of weeks, because the markets just really surged after the election. So let's look at that. Actually, let's go. So here's the Dow, and here's the election, and the market. What did it go up? I think it went up 3-4% in 2 days after the Dow. Let's look. Went up 5%, almost 6% from the election to the peak. Now it lost a couple percent over the last couple days. If we go back to July, when the market peaked in July, we had relative strength in the 80s. We had DSR, we had the stochastic super high. This is when, if you remember, this is when we bought a bunch of puts and did pretty well through here. We talked about that on one of the shows. We went through the detail that we saw. Now here, even though we had this spike, the relative strength only really got above 70. So it started to get a little up there, but not a lot. And the stochastics are just now kind of catching up, and things, so we'll have to see what the next couple of weeks bring. But I think that directionally, coming out of the election, they went the right way, but I just think they went way too far, way too fast. Things got a little bit ahead of their ski. So I would anticipate, kind of being around in this area over the next couple of weeks. S&P, same thing. Again, it got really extreme back in July. We had the sell-off. We've had the rally since. We were just now starting to get back up into these extreme levels, but then the market kind of already rolled over. And everything really happened in 1 or 2 days post-election. It went sideways for 3 or 4 days, and then it fell over 2 days. And it's kind of been the same for all the different indices. Same for the NASDAQ, went sideways and then it fell. I think next week is a big week, considering what happened with the VIX on Friday, to see which direction we go from here. Now, many of you may have seen at one point coming out of the election, I said a couple days after the election, when Tesla had made a huge move, I said, I think there's a trade setting up. I think it's going to happen next week. If it happens, it's going to be really, really scary, but I might have to do it anyway. And sure enough, it did. So coming out of the election, Tesla just absolutely rocketed higher. On the Friday, I think it was the 8th, when it was around 308 or 309, kind of in this area, we started buying puts. And I said, I think it'll probably go higher in the next week, at which point I will add. And sure enough, Monday morning, boom, we're up at like 350. And so, and listen, buying them on Friday was not scary. Buying them on Monday was scary. But here's the thing. It was actually easier, even though it was scary, it was easier to do it that day than it would be to do it today or yesterday. And the reason is because of this. Again, markets don't go in a straight line. When the relative strength is just, when markets are going straight up and the stochastics are rushing higher, and you're in this spot where historically, let's just go back 5 years, right? Let's go back 5 years on Tesla, and let's look every time it's gotten into this range. Okay, here, high RSI rolls over, high RSI rolls over, high RSI rolls over, high RSI rolls over. So you can just see, this is what you want. If you're going to put on a position that's going counter, you want to do it when it's scary because everything is at an extreme. So let's go and bring it back to this now. It was scary, but it was kind of easy to do it right there. Now, because I started buying puts around, I think it was around 308 when I bought our first set. The second set we bought was at 358, and now we're at 320. We're pretty much, as of right now, we're pretty much flat on our put position. They go out through January, so we've got plenty of time. I'm not saying that Tesla is going to absolutely crash, but I think there's a few reasons why I put this on. Is one, I thought the coming out of the election, it's getting the Elon and Trump trade, right? Those two are going to partner up and take over the world basically. Well, I think there's a little bit of a problem with that. Number one. One of Tesla's biggest markets is China. A number of the policies that Trump is going to put in place have the potential to cause problems between the US and China. I don't think China is just going to sit there and take it, right? So I think that it has potential implications for Tesla in China. And if one of their biggest markets comes under threat, that has some implications. The second thing is, and this is admittedly a bit of a stretch, but I also think that if Elon is going to get involved in the government, if he does it in an unofficial way, then there's probably no big deal. But if he gets really involved and starts making policy decisions, that's going to cause all kind of problems for him as the CEO of a public company. If he is cutting subsidies or cutting government programs to his competitors while his government contracts stay in place, that starts to cause controversy, and maybe he even takes some kind of an official role in the government, in which case maybe he has to put his shares in a blind trust. Or again, I'm not saying this is going to happen. I'm just saying the idea that just because Trump won and just because he's buddies with Trump, just because Elon's buddies with Trump, that it automatically means that Tesla is going to $500 and higher. I don't necessarily think that's right. And I thought it was an opportunity, even though it was scary, even though it was, I wouldn't say the puts were cheap. I thought it was an opportunity to make some money. So right now we're break even. We'll see. Maybe we'll make money. Maybe we'll lose money. I think we're going to make money on that trade. And then the last thing that I'm going to talk about, another potential trade, is semiconductors. So this is kind of a long term. Let's just zoom in here. So semiconductors also coming out of the election. Here's the election. Boom. Up 2 days in a row, 3 days in a row, huge gaps, right? Boom, boom, boom. Now I admit I was wanting to put a trade on here. I wanted to buy some puts and I missed it. And it fell really quickly. And then I was going to buy some on Friday. It fell even more. But so here's the thing. If we get a bounce from, so this is kind of an interesting level too, right? This is kind of it was once resistance and now it's kind of, I don't know if it's, I actually don't think it's support, but the pattern right here looks very similar to this pattern right here. Now you remember when we did the episode back in July where we talked about buying puts, semiconductors was one of them, this pattern. Now I think it's pretty similar, right? And so if we get any kind of a bounce up into here, I will probably buy some puts on the semiconductors. Now, before I wrap up, I'm going to say something about whenever I'm doing these, whenever I'm talking about the trades. So somebody asked me, how come whenever you're talking about trades, you're always talking about going short, or you're always talking about buying puts? How come you never talk about buying anything? And you know what? It's actually a really good question. And I'm going to tell you why it is because we already own assets. We are already long. We've owned some stocks for 15 years that we haven't sold. We're long equities, we're long gold. All of our clients own real estate. A lot of them own venture capital funds. A lot of them have some kind of, many of them have exposure to Bitcoin, so or other crypto assets. So the point is if assets go up and to the right, which is why you invest to begin with, we're fine. We're going to make money. So I kind of already have that covered. What I spend a lot of my time doing is looking for problems, looking for things that could cause those assets that go up and to the right to all of a sudden not go up and to the right. And if you're, I suppose if you're looking for monsters, you're eventually going to find some, right? But that's typically what I'm looking for. I'm looking for, when assets are in an uptrend, I'm looking for some kind of a counter trend move. And so that's kind of why I focus on those. And that's why, when I talk to you guys about them, that's where it's. Now, if we get into a market, and the other thing is that we've been in a market that's just going higher and higher. So, it's more likely that you potentially have a reversal when things are at their highs than when things are at their lows. If we get into a market where things are falling a lot, then, we're probably going to be looking for some buying opportunities. Anyway, that's it for this week. I hope everybody enjoyed this. We'll see how this one goes. It's a crazy world out there. It's a mad world, but I hope you guys are all hanging in there okay. And we will be back next week with more. Hang in there. Bye.